Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. For those who continue to argue that the recession should have been in the bag by now, and that since it hasn't arrived, this is proof that it's not coming at all, yesterday was your chance. We gave you all the evidence you needed to come to a more logical conclusion, like the fact that future bankruptcies are clearly not in our rear view. Lordstown Motors was not only proof of that, but also proof that money is not so easy to come by anymore. And now we have millions of jobs in the hands of smaller, less profitable businesses that could go under at any moment. Lordstown Motors was home to about 260 employees. For those that still argue the strength of the labor market as the case for no recession, remember, nearly half of the United States workforce is employed by small businesses with fewer than 500 employees. Not all of these businesses are in the same position as Lordstown Motors, but I can assure you that not all of these businesses will survive. The flip side to that coin is that according to the World Bank, businesses account for nearly 50% of all services consumption. Transportation services to move goods, marketing services to promote their products, accounting services to manage their books. When small and large businesses start to go under, services, which is the last growing part of our economy, starts to lose business. This, in turn, puts more jobs in jeopardy. The unemployment rate will rise. Take accounting firm KPMG, for example. They manage the books for banks, retailers, automakers, and many other types of businesses. They are widely considered as one of the big four accounting firms. And just yesterday, the company announced a second round of layoffs, putting 5% of its staff, or over 1,900 people, out of work. Services are also used to support employees and improve efficiency. For example, we're talking about HR services and supply chain management. To put things into perspective, the latest trade balance report for the United States showed that exports decreased by $9.2 billion, the lowest since March of 2022. This was mainly due to a drop-off in demand for goods. Export services actually increased by $200 million. Travel and other business services were the biggest reason for that increase. If that's not enough on our plate, take into account that the probability of another interest rate increase from the Federal Reserve just became much more probable. And one of our largest trading partners just went into a mild recession, with over 4% of households in Europe projected to run out of savings by the end of the year. The evidence is overwhelming, and like Stephen Hawking said, the first step is being open to the evidence, even if it challenges your beliefs. HSBC Asset Management just went on record as stating the U.S. will face a recession in the last quarter of this year, followed by a contraction and a subsequent recession in Europe in 2024. I have no reason whatsoever to disagree. In fact, this is confirmation to the Mount Everest-sized pile of evidence that the United States economy will need nothing short of a miracle to avoid a recession over the next 18 months. I'm no longer a child. I don't play follow the leader, but I do follow the leading economic index. I'm hoping the trading day treats you well and prosperity becomes you. Be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made.